This is another episode of me trading smart, managing risk while learning how to trade effectively. And today, I did in fact trade smart by not even trading at all. Now, why is that? Well, we have NFP tomorrow, as you all know. And as we get closer and closer to that event, the market becomes more and more manipulative. So, you don't want to be involved in that thing at all. So, did you place any trades today? You probably made some money today. And that's fine, I guess. But me personally, I'd rather just practice the patience and discipline to just sit out of the market entirely because not every day is going to be a trading day. And the market didn't necessarily go anywhere. It did have a lot of volatility in that first half hour, but it kind of just banged around for the rest of the session. So it did show a good setup, but I wasn't willing to take it simply because we're getting closer and closer to NFP. So before I open up the charts, I'm going to read my notes that I took yesterday during the 2024 mentorship livestream, and ICT describes the characteristics of NFP week. So this is what he said: the market tends to not want to go anywhere. It sits still in tiny ranges. If you trade Wednesday, Thursday, or Friday, all you do is note the nearest pool of buy side and sell side and wait for one to get taken, because usually it'll go the other way. So identify your pools of liquidity, wait for one to be engaged. That is the NFP approach. It's just a game of volatility pinball where it's not going to go anywhere and knocks into stops without any directional bias. So during NFP week, you wouldn't expect a trending day, right? And when I open up the charts, here we go, you can see that that holds true exactly as he outlined, right? The market just bangs around back and forth. There's no directional bias. So you would not expect a trending day whatsoever. You would expect it to be range bound, and it just goes for stops. Bangs the buy side, runs lower, bangs the sell side, trades higher, bangs the buy side, and then it just does this over and over and over again, right? It's not really willing to go anywhere. But one thing that I find is very, very interesting is notice all the sell side liquidity that they're leaving intact ahead of tomorrow, right? Look at all these lows building up down here. So that is extremely interesting. We have a low, a higher low, and a higher low. All these lows are relatively equal, and they are leaving that intact ahead of non-farm payroll. So what does that tell us? Well, they're going to use it tomorrow, 100%. This level is getting attacked in some way, shape, or form tomorrow. Without a doubt, they are going to use this huge pool of liquidity that they left intact underneath Tuesday's low, Wednesday's low, and now today's low. You can see how the market is just literally not willing to deliver to these lows. So that's very interesting. I noted that. So today, my approach was to not even take any demo trades, because if you take a demo trade, that's bad data, because this is the market that's highly manipulated, right? Look how we just bang around like this, right? And it's kind of the same thing yesterday, kind of just bang around. Now we had this nice price run right here, of course, but still didn't really go anywhere. I guess this was kind of a directional move, but look what we've been doing since that nice price run that we had on Tuesday that delivered to the weekly objective. So if we go to the weekly time frame, this was the weekly objective, this inefficiency in price right here, this weekly BISI, and we delivered to that range on Tuesday. Now notice what price has done since we delivered to that at 10 o'clock in the morning on Tuesday. We've done literally nothing. Well, we haven't done literally nothing, but we've just been trading in this range, right? So we haven't really been doing much. So that is a characteristic of NFP week. You can't expect a directional move. It's just going to bang around and just knock out stops on either side of the range. Take one, go to the other side, take another, go to the other side, and it's just going to do that over and over and over. That's basically what we see here. So the approach on NFP is just to identify your nearest pool of liquidity, wait for it to get taken, because it'll probably go the other way. Now, coming into today's session, I did tape read a setup. Like I said, I'm not taking any demo trades, not even demo trades on a day like this, because this is a market that is highly manipulated. So I simply read the tape, and that's it. And I just recorded my observations and price. If I pull up my Notion database, and I go to my trade log, these are the two setups that I recorded today that I anticipated playing out in price action. So we had this first one that was very clean, very clear, very obvious, and I'll share a little information of something that I've noticed mashing together market maker models and macros, which could take me a while to explain. I think I explained it in another video already, but I'll touch on it again. So Coming to the New York morning session at 7 o'clock in the morning, let's say I opened up the charts on this candle right here around 6:45 in the morning, New York Eastern Standard Time. We can clearly see that we have a range. And what do? Initially, we drop down. We see protraction lower. That takes the sell side first. So what's next? It's going to reach for the buy side. That's simple. This is obviously a market maker buy model. This is such a clean, easy read. This is literally the market saying, here's what I'm doing. Original consolidation, original protraction lower, takes the sell side first, runs the buy side second. Easy, right? So before these candles even paint, I already know that the market's reaching for the buy side liquidity above this high and this high, because that would complete the market maker buy model. So it's easy. Now, mixing that logic with macros, if we drop down to the 1 minute time frame, check this out. So here's what I notice. During the macros, you see the transition from one side of the curve to the other side of the curve in that market maker model, and it happens during the macro every time. Well, not every time, almost every time. But if you notice that in this higher time frame market maker buy model, notice how during the macro we transition, we move out of this consolidation range. We have a smart money reversal up here. And during the macro, we start repricing lower, large downrange candles, reaching for what? Sell side liquidity first. So this is the start of the sell side of the curve. And then if you notice, the transition from the sell side of the curve to the buy side of the curve occurs during what? A macro. So do you see that? How we started the sell side of the curve during a macro, right? Notice how we leave all these relative equal highs intact. So what is that doing? It's leaving the sell side liquidity there to be ran at a later point in time. And we start repricing lower, taking out the sell side liquidity first during the macro. Now, if we come to the other side of the range, we see the same price action, but opposite, literally. And this is the transition from the sell side of the curve to the buy side of the curve, right? Here's your original consolidation. We trade higher, smart money reversal down here. We also leave these relative equal lows down here. So this is going to get taken at a later date because this would be the start of a market maker sell model. But in this model right here, it's a part of a market maker buy model. So what I've noticed is that during the macros is you usually see the transition from one side of the curve to the next, or the start of a market maker model. In this case, we have our original consolidation here. And then during the macro, initially we drop down, leaving the relative equal highs, large downrange candles, repricing for what? Sell side liquidity first. Runs that first. Then during this macro, we see the transition from the sell side of the curve to the buy side of the curve inside of that higher time frame market maker model. So using the information that is presented during the macro, we know that this thing is in a market maker buy model. And if you notice, look at all these lows that are left intact, right? All these relative equal lows that are left intact, undisturbed, very pretty. They're sitting clean. So what is that doing? Engineering sell side liquidity. Now all this is left intact to get ran at a later point in time, which it does, right? But we know that the market isn't a buy program because it's consistently pricing in higher highs and higher lows. That's how we know the market isn't a buy program. And at the moment, it is not interested in reaching for sell side liquidity. It is aiming for some pool of liquidity on that higher time frame, which would be the terminus of the price run, which was this high right here in what? The original consolidation, right? Consolidate, drop down, large protraction lower, manipulation. Smart money reversal during the macro indicates the transition from the sell side of the curve to the buy side of the curve to go run the terminus of this price run from here to here. And we take the buy side liquidity. And we can clearly see that information during the macro. So I'm telling y'all, if you focus on these elements of time, the algorithm literally tells you what it's going to do. Reading this macro, we can see, okay, this is sell side of the curve. All right. Reading this macro, we can see, okay, it's the buy side of the curve. And what can we reach for? Well, we have all those clean highs on the 15-minute time frame right here and right here that are undisturbed. So that could be a terminus for this price run. So I use that logic to tape read a nice setup that I saw on the lower time frame, and it played out. Delivered on the news driver as well. News driver came out. Initially, the market manipulated higher, took the buy side. That was the terminus of this market maker buy model. Then we switch from the buy side of the curve to the sell side of the curve, clean these lows out, and then we resume this higher time frame market maker buy model. See that? We have all these clean relative equal highs down here. Consolidation, consolidation, protraction lower. Notice how we're leaving all these clean highs on the way down, right? So what is that doing? Engineering buy side liquidity. And it's ran at a later point in time. So this right here is a market maker sell model inside of the higher time frame market maker buy model. We reprice the sell side liquidity below here. Smart money reversal at the 9:30 open. And boom, delivers to the previous day high. Runs right for it. So the setup that I saw was during the 650 to 710 macro. I read the information given during this macro to identify this setup. So now what did I see? Well, here's something else that I noticed. If the market has not delivered to a terminus in that market maker buy model, what we'll see during the macro is a retracement on the higher time frame that is a market maker model in alignment with the higher time frame market maker model on the lower time frame. Now let me explain that. So you notice how we're on the buy side of the curve here, right? But the terminus of this price run, where we think this move could potentially end, what key pool of liquidity that we're aiming for is this high right here. So let's just mark this. That's our primary buy side liquidity on the 15-minute time frame, right? This is where we think this move can end. We also have this pool of liquidity here. So let's just mark that out as well. Okay. Now, if you notice during this macro, what do? We come just shy of this high. So what is that doing? That is priming buy side. That is priming this high. That is engineering buy side liquidity because we come just shy of this high, but we turn away. So anybody who's short off of this high with a buy stop above this high right here, they have a sympathetic sigh of relief because we come close to that high, but we turn away. So they're about to get stopped out, but then the market moves in their favor again. So they have a sympathetic sigh of relief. They're like, oh man, I almost got stopped out, but I didn't. And you have other traders who are probably trading supply and demand or some horse shit like that who are getting short off this high as well, right? Because this is probably a supply zone, which is what I used to trade. I used to trade supply and demand. And I dropped all that for this. And I can tell you for sure that this is better. So notice how we come just shy of that high. So during this macro, this is not the start of an entirely new move because price has not yet delivered to its terminus on the higher time frame. Right? This high does not deliver to this high or this high, which would be the terminus for this market maker buy model. So what is it doing during this macro? Well, it's priming this high, engineering more buy side liquidity, getting traders thinking that this is an area of resistance or supply, priming traders who are already short off this high, and it's a retracement into a higher time frame discount array. But the retracement on the higher time frame is a lower time frame market maker model that is in alignment with the higher time frame market maker model. But on the higher time frame, you simply see that as a retracement into a discount array. So notice in this candle and this candle, look how high we trade it all the way up here, right? So if you notice in this candle and this candle, these two candles right here, this right here, or these three candles really, this is that lower time frame market maker buy model. But what is this? This is simply a retracement into the higher time frame discount array. And then the move continues because during this macro, price has not yet delivered to its terminus. So during this macro, this is not the start of another market maker model. It is simply a lower time frame market maker model that is in alignment with the higher time frame model because price has not yet delivered to its terminus. It's not done finishing its job, right? This is telling us that I want to run the buy side liquidity above this high, but it hasn't done so yet. So during this macro, what do we see? A lower time frame market maker model that is in alignment with the higher time frame market maker model that is simply a retracement on the higher time frame. So if I drop down to the 15-second, this will become a whole lot more clear. Check this out. During this macro, what do? We come just shy of that high, we turn away. Does this not look like the same thing that we saw on the higher time frame on the 15-minute chart? It's a market maker buy model, right? Here you have your original consolidation. We have relative equal highs. We drop down during the macro, reaching for sell side liquidity. But this is just simply the algorithm repricing to that higher time frame imbalance during the macro. It is not the start of an entirely new move. Now, if you don't have this information, you might think that we're putting in a significant high here, and you might think that this is the start of an entirely new move and we're going to start trading lower. But that's not the case. This is just the algorithm repricing to that higher time frame PD array. But on the lower time frame, you can see that it's a market maker buy model in alignment with the higher time frame market maker buy model, right? Your original consolidation, drop down, smart money reversal, and here the market trades into yesterday's first presented for value gap. Now, I'm not sure why I have two gray boxes there. Let me see. Okay, I don't know why I put two on there. That is a mistake. So let's go ahead and mark this out. So this is yesterday's first presented for value gap at 9:30. After 9:30, the very first fair value gap that you see, extend that out in time. That's your first presented for value gap. It's good for the next 3 days. So dropping back down into a 15-second chart, we can see that we have that lower time frame market maker buy model, and the algorithm is simply repricing to that higher time frame imbalance, as well as yesterday's first presented for value gap. And this is where we see a smart money reversal. So this is my entry model right here, a breaker formation. We have a high, or we have a low, a high, a lower low, and a higher high. The first inversion fair value gap that I see in the price leg that has the stop run inside of the breaker, that is my entry. So my limit order is going here. You notice how we drop back down into it. We color outside the lines a bit, and we start trading higher. Now, I saw this information and thought, okay, that was a nice reaction off of that. And then we have another market structure shift. We break this short-term high right here. We leave a fair value gap, model 2022. And this is where I would have bought right here. Now, I almost traded in the moment, but I caught myself and was like, no, dude, NFP tomorrow, you're not trading, okay? So I threw a limit order on there, but I wasn't connected to the paper trading thing or whatever. So it prevented me from getting long, which is a good thing because I don't want to trade on a day like today. I want to sit still and practice patience and discipline. But I would have took the market long here, aiming for a low threshold objective here. And that's it. I'd be done. That's all I need. Because I'm new, I'm a beginner, I'm learning. But yeah, this is my entry model. Breaker, that first inversion fair value gap, taking that right there. Now I read this information off of the upper quadrant of yesterday's first presented fair value gap. Let's drop a midline on this. Notice how we work off the upper quadrant. I bet if we did this, let's see. Okay, we come just shy of that upper quadrant level. But this is my entry model right here. And boom, delivers. Okay. And then 8:30, reach to the buy side liquidity first. Smart money reversal. If I go to 1 minute time frame, I see my entry model present in price action again after we deliver to that terminus, right? So we can see that at 8:30, and I view this as the algorithm just marking time. So there's not much information presented during this macro because we're waiting for that 8:30 high impact news driver. So the algorithm is just going to trade sideways. It's just going to mark time until that next element of time comes out. So if we go to the 15-minute time frame, here's the terminus of that, right? And this market maker buy model delivers beautifully during that news driver. Trades higher, manipulates the buy stops, manipulates traders thinking this thing's going higher. Large displacement down back into the range immediately. And it's the same thing, right? We have a high, a low, a higher high, and a lower low. That first inversion fair value gap right there, extend that out in time. The first inversion fair value gap inside the price leg that does the stop run, that's my entry. Extend that out in time. Doink. And notice how we trade down here, but we leave the sell side liquidity intact. So what does that do? Forms relative equal lows, trades up into the inversion fair value gap, and rolls lower. It's a beautiful setup. Perfect. Okay. And then after 9:30, I was kind of just tuned out, didn't really care. I had other things to do. So I got on with my day. So None of that really mattered to me, but my entry model is present again. So we have a breaker, a high, low, a higher high, and a lower low. The first inversion fair value gap, extend that out in time. Boom. There you go. So that's what I look for in price. That's how I get into a trade. I want to see that formation when the market taps into a key area of liquidity. Now it's even better if it has an element of time with it. 950, 1010. There you go. So I was hands off today, which is good. I practiced literally sitting behind the screens and just not doing anything at all because the richest traders have well written plans for inactivity, meaning they know exactly when they're not going to get in there and push the button because they know when it is likely that they're going to hurt themselves. And a day like today is a day where you're likely to hurt yourselves because as we get closer and closer to that non-farm payroll event, the market starts getting more and more manipulated. And I mean, look at the price action after that, right? What are you gonna do in this? What are you gonna do in this? Does this look clean to you? Does this look an easy read? No, not really. Especially if you're new, right? Especially if you're new, you have to know when you're gonna hurt yourself. Not even if you're new, everybody should know when are you gonna hurt yourself, which is a market characteristic like this, right? So I'm not even gonna demo trade this. Literally, I'm not even gonna demo trade it. So I like this analogy that ICT used in the live stream the other day. I'm gonna read it real quick, and then that should be it. Let's see. Okay. Do not allow the manipulation around the report to affect what you've built slash been building, right? Do not let the manipulation around these reports destroy your equity curve. Do not let these conditions destroy your equity curve. So these events are like a reaper, and you are a farmer, and your trading results and all the money that you've been making is your harvest. You don't want to let the reaper come in there and just slash everything up and just destroy everything, right? Or these news events are like a plague. And if the plague touches your harvest, well, it's going to ruin everything. But if you don't allow the plague to touch your harvest, then it can't harm your harvest, right? So you want to keep it safe and protect it. Protect it from the plague, protect it from the reaper. That is these high impact news events like FOMC, PPI, CPI, and NFP, right? These are the events that we don't want to be engaging in at all. So I had a lot of traders in my Discord today that simply sat sidelined, and I'm proud of every single one of them because that was the right move to do today. So that brings me to the point of my Discord. If you would like to join my Discord community, this is the best place to connect with me and talk to me and talk with a bunch of other like-minded traders. Really, we're all in here connecting with each other. We all love to sit in hangout sessions and just talk and read price action together. So if you want to be a part of that, I'd love for you to join. But please engage in the community because we do kick people that are inactive and don't talk at all. This Sunday is going to be the first time that I remove a lot of inactive people from the community because we have 242 members, but not everybody is engaging, right? So I want to build a community, like a tight knit circle of like-minded traders who are just in there talking, growing with each other, engaging with each other, sharing lessons, sharing losses, sharing wins, sharing everything, right? And we're all just growing together. So that's what I want to cultivate here. And if you want to be a part of that, feel free to join. But if you're going to join and not say anything, just please don't join. Okay? All right. That's it for this one. Goodbye.